Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's talk about what has happened today, what we can expect moving forward, and all of that good stuff. So as per usual, if you enjoyed this video, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section is live. The link is down below in the description of the video. If you're interested, for just $2.99 a month, you get access to all my intraday thoughts, posts, updates, options, flows, technical analysis, updates, etc., on Tesla every single day the market is open. We'd love to have it there. We're pretty much around 300 members strong right now, consistently too. So that's nice to see. People are clearly sticking around. So we'd love to have you there as well. But if not, it's all good. Let's jump into the video. So Tesla, we'll be closing in just about a minute here, but seems like we'll be closing at just shy of $180 per share, which is going to be nonetheless an increase of about 1.2% on the day, which compared to the market is, a little bit of an outperformance. Nothing completely crazy, but, respectable, we'll just say outperformance, right? So let's talk about this, right? First, we're going to hide all the drawings. We're going to hide all the lines, hide all that messiness, and we're going to look at something pretty simple here, right? And there's a few things here. First and foremost, the daily candle. So yesterday, like I said, we had a pretty bearish looking daily candle. This could have been pretty bad, right? That's why I exited my position yesterday. I did re-enter it today, but I exited yesterday mainly because this was, like I said, as I said yesterday, this shooting star candle doesn't mean much in itself. Like I said yesterday, what matters is the follow through the next day, right? For instance, if we had a gap down to start the day, that actually could have been bad. And honestly, we easily could have come back all the way down to about this 172 level. Absolutely could have happened. It didn't. We actually gapped up, which is why we did have overall strength, I would say. Even though we did start off the morning with a bit of a flush, right back down towards these levels over here, which, when I bring back the drawings, you can see, right? It's so messy. I hate it. But, this level right here, this kind of 175-ish level, right? That's exactly where we came to, which I told my members pretty much right in the morning somewhere right around here. This is the cup and handle. I think it was this one here. No, that's morning gap. Or was it? Yeah, 175 right here. Right? And that's exactly what happened. And we came right back down to about, what did we come down to? I think we came down to 176. Okay, $1 off. Pretty darn close, right? So, not bad. Now, I'll go ahead and hide the drawings for now. The good thing here is the fact that we are setting up a daily hammer candle. Right now, the hammer candle is decent. And the reason I say it's decent is because, well, the good aspects of this hammer candle is, well, it's got a small body, it's got a long wick and a very short wick at the top. That's pretty good. That's the characteristics of our hammer candle. The only issue is, well, there's two issues. One issue is the fact that, well, it's red. First of all, it's red. Second of all, it's not really happening in a downtrend. Like, this is the kind of candle I'd want to see like down here somewhere. You know what I mean? Happening up here, some people might argue it's a hanging man candle, which could be a bearish candle because it's technically happening in a short time frame, of course, but an uptrend over here, right? It is happening in a short-term uptrend. So some people may actually look at this as a bearish candle. Hard to say, honestly. It's hard to pinpoint exactly. So that's why I'm not ruling it in too heavily, one way or the other. Personally, just strictly off of this candle alone. However, there's more to talk about that can kind of, help us determine as to, what the next direction can actually be. For instance, we officially finally closed back above the 21 EMA, which is this yellow line right here, right? It did happen way back over here, which, this was a false alarm, obviously, with the bear flag. But, officially we have a reclosed back above and regained the 21 EMA on the daily chart and, decently above it, right? It wasn't like a close right on it. It was enough above it that we can convincingly and confidently even say, yeah, we closed above it. There's no question about that. It's above it, plain and simple, no questions. Great, that's good news. On top of that, we are above the 13 EMA and the 5 EMA, which is the red and the green line respectively. But more importantly, this is what I talked about before. Remember I talked about that, look for that signal potentially. We crossed the 5, finally crossed the 13. And if you look back, I'm not going to do it in this video because, I don't want to spend the whole time doing this, but it's usually, obviously there are some false signals. Not every single indicator and, these kind of things is perfect, but there are, it's accurate enough. Like it's pretty good. It's pretty darn good. Now, obviously this cross isn't the most convincing cross. You have to like really zoom in to see this cross over here. So, we'd want to see a bit more of like, follow through tomorrow, right? To really see this crossover and like more convincingly, I would say this is like a, you really gotta, really zoom in to see the cross. So not the most convincing thing, but it's still technically there, and it's a damn good start. It's definitely better for bulls than worse for bulls. I'll tell you that right now. So it's a good start, but I want to see the follow through tomorrow as well. But a good start. So those are the main things I'm looking at, just strictly off of that right there, right? Some pretty bullish setups happening, right? We have the MACD still flipped the bullish, still looking pretty darn solid, not too shabby, right? The RSI is on the verge of crossing 50. The stochastic down here, the stochastic momentum indicator, looking pretty solid, right? Looking pretty solid, not too shabby whatsoever. Now let's bring out the drawings. This is where it's gonna get a little messy. The first thing I want to talk about, so I can get rid of it, honestly, is gonna be two things. First, on the daily chart, we have a potential inverted head and shoulders pattern setting up. Now, there's a lot of work to be done for this inverted head and shoulders pattern to actually still, to exist. Because right now I'm not saying it exists right now, I'm saying it can. And the reason I'm saying it can is because, well, as you can see, we have the left shoulder back here in a massive downtrend, of course, which is important, right? This only works in a downtrend. I see some people posting inverted head and shoulders in an uptrend. And I see some people posting regular, like the bearish head and shoulders in a downtrend. Doesn't make sense. It's a reversal pattern, right? You can't, anyway, I'm sure you get the idea as to why it doesn't make much sense to me personally. But in a downtrend, it makes sense. Why? So we have the left shoulder here. We have the head over here that we have essentially been developing the past, week or two, right? And then we have a potential right shoulder getting ready to develop all the way over here on the right. What would constitute for this to develop? Well, what I'd want to be seeing is this. First and foremost, I want to see Tesla break above pretty much 183.5-ish, right? That's the level I want to see break, hold, and close above, at least, right? That would be good. If we can do that, in my opinion, the room all the way back up to this level over here, close to $205, even like $200 to $205, it's open. It's open. It's a very real possibility. So, for instance, it could look something like this. Let's say, we do break up, and let's say we ultimately make our way back up here. I expect us to reject here. This will be down over here. This will be the neckline of the head and shoulders pattern, right? The inverted one, of course. We reject, most likely come back down, retest this now from, all the resistance, all support into resistance into now support once again. That'll set up the right shoulder. And from there, I think we can overall base, break up. And if we break above, again, this neckline over here, that would actually, pretty much activate this inverted head and shoulders pattern, and we'll make our way back up, right? And this, in my opinion, if you measure, the way you usually measure this is you take the bottom of the range, if you will, which is like the head essentially, to the neckline roughly, right? And then it's pretty much this right here. And then you take that and you measure it pretty much from the break, and you can see it'll take us somewhere pretty much up to around this resistance level almost perfectly, right? Which, if I extend it down, it will pretty much be somewhere around the 230s to potentially even tapping the 240s sometime in like a month or two potentially. That is a possibility, right? But again, this is all obviously just, thinking a bit ahead here. It doesn't mean this has to play out. It doesn't mean that this head and shoulders will be a thing. It's just a possibility, and it's just kind of looking forward a little bit more as to what may come. Right? So just, take that into account. That is important. Now, if we go over to the 1 hour chart and take another look over here, there's two things to look at here, right? This is obviously more, shorter time frame, but there's also a potential inverted head and shoulders right here, right? That's number one, bullish, right? Neckline pretty much being that 183 level. So this small inverted head and shoulders with the 183.5 rough neckline will be what could potentially bring us up to that 200 level, which then could potentially start setting up that much larger inverted head and shoulders pattern on Tesla. But also what we may arguably have as well is a cup and handle pattern that looks something like this, right? Let me go ahead and redraw that. Something like this. That's the cup. And now we're essentially setting up the handle, which is these two red lines you can see over here. Or you can just even argue it's just a bull flag, right? Massive run up that we had over here, which was a decent run up. It was like a 10% run up just off this move alone, right? And then we have, of course, now is descending, creating the bull flag rather, or the handle of the cup, whichever way you want to look at it, which means that, there is still a very real possibility, and this could happen after the delivery numbers, that we do drop back down one more time to the bottom of this channel to retest that with a 5-point touch point, right? That's usually how this happens, right? You have the 1 touch point here, then you have the 2 touch point, you have the 3 today, then you have potentially the 4th touch point, which can happen even tomorrow potentially, which will bring us back down to about 174, 3, something like that. And then ultimately we break out like this, and then that activates this cup and handle pattern, which will be quite bullish. So that's kind of the main way I'm looking at it right now, right? That's the overall thesis. In my opinion, the technicals for Tesla are looking actually surprisingly pretty darn good. Like it's really setting up a bullish pattern. It doesn't mean it has to play out. I want to make that very clear. It doesn't mean it will play out. But based on what it's looking like right now, the probabilities are pretty good, in my opinion. It's looking pretty solid, and the probabilities of it actually playing out, in my opinion, are pretty high. But Obviously not 100% because nothing is 100% in the market. And the sooner you realize that, the better. So I did enter position today. Like I said, I sold calls just for tomorrow, just in case, as a small hedge, just in case we do end up dropping down. So at least I'll make something on those shares, as a realized gain. But I will continue buying this dip down to pretty much just 174.5-ish level. And as long as that holds, I'm very happy and I'm very bullish. But if we start losing this 174, especially like 173 is where I'm really going to start getting nervous. If you start losing like 173, that's where, this thesis kind of starts to fall apart. And there's a chance that we come back all the way down to this 160 level for potential double bottom play, assuming that, of course, holds as well. It really depends on how the delivery numbers happen or go for next week, Tuesday. But that's kind of the overall situation I'm seeing right now for Tesla, if that makes sense. Next thing I want to look at is going to be this, right? So I want to take away these lines for now, not to make things too, confusing and there's too many lines and, kind of bullshit on the screen. Let's take a look at the daily chart. This is the mean reversion line, right? This is what I like to see here, right? So by the way, we are potentially still in this little rising channel, which could be bearish. That is a possibility. That is still a risk. But, this mean reversion line, I talked about it many times, right? Essentially, you want to hover around the middle, right? Anything above is going to starting to be considered overbought. Anything well below into these yellow lines, and especially the red line, is starting to consider to be oversold with each incremental level down below, right? Pretty straightforward. Anyway, the white line in the center is roughly the 20-day moving average, which is the mean, the reversion line. And, we pretty much went to the bottom, right? The second line, which is, we're starting to get oversold. We came right back to the mean reversion line. Now we're dancing above it, which is good. But, we're kind of neutral right now, slightly bullish, in my opinion, based on this. Now, if you go over to the 4-hour chart, you can see we are actually, approaching some potentially slightly overbought levels. So if we were to revert to the mean, if you will, which is back to this, white line over here, which, it will of course go up a little bit tomorrow to kind of, follow our trend, which, we are above it. It would mean that, this will line up pretty darn well with the bottom of this, bull flag or handle of the cup that I just talked about, which would essentially line up with a retest of about $174-ish per share. Again, as early as tomorrow, right? It can easily be as early as tomorrow, if not Monday. Keep in mind the Friday, the market is closed. So that's kind of what I will be eyeballing. And I wouldn't be surprised. Honestly, I did enter position today, but I entered with the intent knowing that, there is a real possibility that we would, drop down to about that 174 level, and I'll just continue buying that, right? I'll be continuing to buy that. It's looking good. Tesla broke above technicals I was waiting for, and it's looking promising. There's certain crossovers that are happening, like the 5 and the 13. I like the way it's looking. Obviously, I do want to put some caveats out there. Despite me sounding very bullish, which I am, and I think the technicals are looking great for a move up to about 200, honestly, I don't think that's impossible over the next couple of weeks or so. Unfortunately, there are some, as always, risks, right? There are some things that can still ruin this momentum, we'll just say, ruin this potential bullish thesis that I have right here, right? What are they? There's two things in my opinion. The first of which is, well, the delivery numbers, right? We have Tesla's Q1 delivery numbers coming out on Tuesday. They're not expected to be very good. They're supposed to be pretty bearish, actually. It's supposed to be potentially an even decline year over year, which is pretty bad, considering Tesla is supposed to be a growth stock and it's priced as a growth stock. But if the delivery numbers come in negative, well, where's the growth, right? That's a concern. So that could be a potential issue, right? We could get a pretty substantial sell-off off of that if it's like really bad, or if the market reacts bad. Maybe it's not priced in enough just yet. But at the same time, everyone and their mother is expecting it to be really bad and for Tesla to tank on that. So maybe it won't. Who knows what's going to happen? But that is a risk. That is a risk that is just kind of out of our control. We don't even know how the market's going to react to it, even if it does come in poorly. But maybe the market's priced in it. Who knows? Nobody knows. That's the risk that this does involve, right? Unfortunately, it is what it is. On top of that, we also have, well, the market, right? If the market has to finally roll over, who knows if it will, right? The market's still looking pretty darn strong, right? It's still kind of chilling, honestly. But, if you bring over to the 5 and the 13, you can see it still hasn't crossed on the here. It still hasn't crossed on the SPY. The market's still in an uptrend. I see no reason to be bearish on the market just yet. Yes, it's been going up like a maniac. Yes, it probably needs to cool off at some point. But in my opinion, especially on SPY, there's nothing suggesting that it should start yet until, at the very least, I see again the 5 cross below the red, which is the 13 EMA, or exponential moving average, EMA, whatever. But we're not seeing that. And they're still well apart. They're still... we need to sell off to even start potentially getting that cross. So we'll see how this plays out, right? We'll see how this plays out. But there's a lot of things being, happening here for Tesla, I guess. Let's just say that, right? Potentially broke out of this monthly downtrend as well today on today's candle. So we'll see. We're in a bit of an interesting situation. There's a lot of really bullish technicals setting up for Tesla. I think 200 is in play. But like I said, there are those two major risk factors. Probably the bigger one, in my opinion, for the short term is going to be the delivery numbers and really just how the market wants to react to those numbers. That will be the biggest kind of question mark in the air right now. Who knows? And I'm not going to pretend here and tell you that I know, because I have no idea. But if we kind of remove that and just look at strictly the technicals, Tesla looks like it wants to reverse, man. It really, really, really does. Again, potential sell-off still coming up to about 174-ish. I still think is in play, but otherwise, I think it's looking good. As long as that holds, I think it's looking pretty darn good. If it doesn't, obviously, well, not so good. But yeah, thanks for watching, ladies and gentlemen. Let me know what you think down below. If you enjoyed the video, don't forget to hit that like button. And as usual, I will see you tomorrow. Peace.